A lot of people think that the stock market is due to crash again. Well, I'll tell you what I think and why, and then I will do my regular weekly market analysis. We're going to look at the day trade of the week on CNET, and we'll do a Stockscores market scan in search of some good stocks to trade going forward. We've got a pretty hot stock market right now, particularly the stocks under $10. There's just stock after stock, day after day, are making really big moves, and it feels a little irrational. It has many people wondering if the market is due for a correction, and I think that makes a lot of sense. However, there is no sign of one, and therefore trying to second guess this strong stock market is going to leave you out of the opportunity, because every day there's great trading opportunities, and sitting on the sidelines will cost you money, and shorting against this market will punish you. At least that's how it has been in the last little while. Now that could change tomorrow, it could change a week from now. So what you need to know is what to look for as a signal that a crash is coming. See, crashes don't happen overnight. They take time to develop. And if you try to anticipate one because you don't want to get burnt by the crash, we end up getting burnt by second guessing a strong market. And so what do you look for? Very simple. Look for a break of trend. And by doing so, you will never get out at the high, but you will get out early in a corrective phase. Now, I'm going to show you a chart in a moment of the S&P 500 and just how even the COVID crash, which happened in March of 2020, even how that one gave you warnings. And it was probably one of the quickest crashes I've ever seen. The market sold off very sharply in a very short amount of time, and yet it gave you the warnings that that weakness was coming. So let's take a look at that chart. And all we do is draw a trend line across the bottoms of the trend. And there you can see in late February, early March, the market broke down. We had another little mini crash this fall. It wasn't major, but again, it gave you a warning and allowed you to get out and sort of stay on the sidelines through that roughly month of weakness. Well, right now we have this upward trend line intact. This is called an upward sloping channel, and we're bouncing around in there, generally migrating higher. But until that trend line is broken, and it should be broken in an obvious way, until that is broken, just stay on the buy side of this market. It may not make sense. It may make you wonder if you are being insane. However, it doesn't matter. What matters is that the market is going up, that people are chasing stocks higher, and until that stops, you may as well stay on the buy side. All right, so let's get into this week's normal market analysis, looking at the S&P 500. We'll take a little closer look here. This is the S&P 500 intraday chart, so 30-day, 60-minute chart. And even on that very short-term time frame, we've got a nice strong upward trend. Now we have been moving higher for 5 or 6 days, so we're probably due for a little bit of a pullback. And so watch for that line to be broken as a sign that maybe we're going to pull back to this more shallow upward trend line. Looking at the 3-year weekly chart, you can see that we are in this nice upward trend right here, upward sloping channel, and no sign of weakness. So why second guess it? Until the market starts to break the upward trend line, you just stick with the trade, even if it makes no sense. Here we had another one back here, break of trend back in 2018. The market spent the next 3 months going lower, or 2.5 months going lower, but it gave you a warning right there. Gave you a warning, break of trend. No break of trend right now, so we stay on the long side. All right, NASDAQ 100. Of course, there's a lot of stocks making big moves here, like Tesla. Maybe it makes no sense, but there's no reason to sell those stocks yet because they are not breaking their upward trend. NASDAQ is in a bullish trend, so be bullish. The Russell 2000, those small cap stocks, those stocks under $10 that are producing so many great trades right now, is in an upward sloping channel. Now this is at the top of the channel, which means we're probably due for a little bit of a pullback near term. We're talking a few days, but unless that upward trend line is broken, stick with it. And there's no break of trend yet, so we're going to stay on the buy side. Canadian markets rallied very nicely this week. We will call that a bullish trend, having broken out of that sideways range. The longer term chart I'm a little bit concerned about because it's rallied into resistance from the old highs. Basically, we've made back all of the COVID losses, made it all back slowly, and now we're at resistance. So we may see a little bit of a pullback short term, but there's no sign of one yet. There's no breakdown on any time frame. I'm just saying it would make some sense for the market to have a little bit of a pullback here. The small cap or the micro cap stocks in Canada, nicely trending higher, a little bit parabolic. What do I mean by that? Well, there's your linear trend line. See how it's gone to a curve to the upside? That usually comes before a little bit of a pullback. So I think a pullback is likely there, but no real strong sign of one yet. Commodities, gold tried to rally this week, tried to break this pullback line the last couple of weeks, started the week looking like it was going to, but failed, came back into this range. And so I would say gold is still fighting to resume that longer term upward trend line. Here's another example of a parabolic trend. Trend goes up, runs away from the trend line. When they do that, inevitably they pull back to the trend line and bounce off of it. It's a very reliable rule in chart analysis. Here's oil. Talked about oil in recent weeks, how it's been slowly building optimism. We broke out through some resistance about 6 weeks ago. Had a pretty good week for oil, following through from the breakout. And we're starting to see some opportunity in those oil stocks. I think you don't want to get too aggressive yet because it's still got a lot of resistance that it's going to have to work through. But there are opportunities in this market. So start to look for some buying opportunities in the energy stocks, the oil and gas stocks. And the fear chart, back to the lows. Fear is gone. Maybe that means the market's complacent. Could be. But again, until there's a sign of a breakdown, until there's an uptick in fear, the VXX is the chart you watch for fear, there's no reason to be selling the market in general. All right. So my ratings then, long-term bullish on the US market, short-term bullish. Canadian market, neutral long-term because we have rallied into resistance where I expect it may get stuck. Bullish short-term. Gold, neutral long-term, bearish short-term. And oil, neutral long-term and bullish short-term. Stocks continue to march higher. And while it may seem that the market is overextended, there are no signs of weakness. Remain optimistic, but watch for a break of the trend. Gold has failed to resume its upward trend, so be careful with the gold stocks. Oil continues its recovery, but it still has those longer-term issues of longer-term pessimism to fight through. And as I said, fear is low. All right, so let's look at the day trade of the week. This is something I do each week to sort of discuss one of the stocks that we trade in the active live service on Stockscores. And you can go to the Stockscores website, stockscores.com, and learn a little bit more about active live. Essentially, with that service, you're watching my real-time analysis of the market where I look for day trade opportunities as it happens with some fairly sophisticated algorithms and software. I don't do what most people do. We use tools and 30 years of experience to find these things. So each week I try to show you one of those stocks just to give you a sense of the economics of day trading. This week, it's a stock that I traded on Friday, CNET. And CNET, I have no idea what they do. I don't care. What matters to me is market activity. And this stock started to trade abnormally early in the day, and it met the requirements of my algorithm. I just follow rules. That's how I trade. And you can see the spike in volume, the spike in price. These little pink dots here are the action candle indicator. And we then have an algorithm that calculates position size based on risk. In this case, for every $100 of risk, the position size was 760 shares. That meant about $2,100 of capital. Because this stock is under $3, it cannot be margined, so you have to put up the $2,100 in capital. It made 10 RR, 10 times risk, which meant for every $100 of risk, you made a $100 gain. That's a 47.6% return on the capital required on a trade that lasted about an hour. Now, what I want to highlight here is the sell signal. I often don't do that. In this case, we had a very steep upward trend. The market hit 15 RR right there. So once we get above 5 or 6, I start to look for trend line breaks. And we had a trend line break right there. Talked about that for the overall market as a long-term trade. But we can also apply that same thinking when we're day trading. The stock moved very quickly to the upside. It made that big gain in about an hour, hour and a half, and lock in that 10 RR profit, which was good because by the end of the day, it had gone a lot lower. And if you had held till the end of the day, it would only made about a 2 times risk return. All right, so now let's do a market scan on Stockscores. And this week, what I want to do is show you a scan that will help you identify the stocks that are worth trading in this market. As I said, the small cap sector is the best sector right now, the lower price stocks. And so we're going to run the abnormal breaks scan, which looks for stocks trading abnormally, abnormal volume, abnormal price action. But we're going to restrict it to the 10-day chart, the stocks under $10. And then we're also going to analyze the shorter term charts for those swing trade setups. So let's jump over to Stockscores now. And again, this is a preset scan. You do have to be a member of Stockscores to use this. You can learn more about membership and courses and that sort of thing by going to the website. All right, so I just ran the scan, but I forgot to do something. Let's go back. So we're going to run the abnormal break scan. I'm going to run it on stocks under $10, so I can add in more filters. So we'll do under 10 and more than 50 cents. You can do whatever price range you want, but this is kind of the hot section of the market right now, so that's what I want to focus on. So there's 43 stocks that meet the requirements of this scan. Now what I'm going to do is take you through these a little more slowly, and we're going to look for stocks that are just coming alive. So this global star, GSAT, started coming alive 4 days ago. Traded very abnormally on Friday as well, but I want to catch them when they just start to come alive. And so that's what I'm looking for when I'm looking at these charts. And so here's one that looks pretty good, PVL. You can see that up until Friday, there's Friday's trading, Friday's volume. It was pretty boring, right? Not a lot going on. I mean, it made a little move here back in November into December, but for the last month or so, it's been pretty dead. So it's got some abnormal action there. Well, if you run this during the day, you can then also switch to the intraday chart and look for when the abnormal action starts. And here you can see this, what's called an ascending triangle pattern. Now this is a 10-day, 30-minute chart, and you can see it coming alive right there. So if you run these scans during the day, you're able to get in on this one, for example, at around 87 cents. Market closed at 90. But I do like it longer term. I like that longer term chart. If I was to rate it out of 10, I'd give it a 6.5, which means I think this stock has a 65% chance of going higher. But because the market's very active right now, run these scans during the day for my Stockscores members. Run the scans during the day and look for that abnormal activity that's starting earlier in the day, breaking from the predictive patterns that I teach you to look for. Now let's go look and see if there's any others. So here's another stock that came alive on Friday. Up until Friday, it was pretty dead. So let's take a look at a shorter term chart. And here you see it. This is the kind of things we're looking for in active live as well every day. Here's a stock that's boring, trading in this sideways trading range. And then it came alive right there early in the day, January 8th. See the volume spike? See the price action spike? That's at $1. By the end of the day, it was at $1.17. It hit $1.45. You know, from here to here, that's 40% plus on a stock that probably never heard about. And all of a sudden it comes alive with abnormal activity. You can take advantage of that. And this is a tool to help you do that. It's suitable for swing trading, for position trading. For day trading, I recommend that you use our active live service where you can watch my real-time analysis, very fast, real-time moving stocks, that sort of thing. So we try to offer something for everyone. Well, I hope that you've enjoyed this week's video. It's our first video of 2021. Please leave a comment, hit that like button, subscribe, turn notifications on, all that sort of thing. We've got lots more great content coming in 2021. Hope that you've enjoyed this. Have a great week in the market and trade well.